Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1997th edition of Short-Term Trading Live with Oscar. Traders, welcome, welcome. YouTube fans, welcome, welcome to my YouTube channel. Let me apologize for doing another desktop shoot video. I much prefer to be in front of the camera. But there's something here that I think is better illustrated by using the computer to show you tonight's video. So for the rest of the week, I'll try to give you videos with me standing in front of the camera and illustrating. But for now, let me show you what's going on. Please remember that trading futures, stocks, ETFs, options, you name it, very risky, extremely risky, can cause substantial financial loss, and is not suitable for half you cats out there. But for the traders that know to put your stops in first before you trade, never trade without risk capital earmarked to be lost in case something goes wrong, and you know the risks behind this game, well then follow me and let's get moving. Livewithoscar.com is where you can find me in a live chat room, basically 24 hours a day. Camera and microphone are on as often as possible. If you like what you are about to see, please subscribe to my videos. Like them across the internet, share them across the internet. Do me a favor and help me gain more subscribers, and I will continue to bring this content to you. So what is going on? For trading on 9/17 Tuesday 2019, which is literally day one of a two-day Fed meeting where the Fed will be adjusting interest rates, I'm here to tell you that my last video for you on Sunday evening is absolutely correct so far, thus far. It's correct that this is a double top, albeit slightly, it's not exact, it's not the same height. So you had the high here of 30.29.5, and then you had a high here of 30.23.75, making it slightly lopsided, but this is a fine art, not a science, kids. It's okay if it looks like a double top, if it reacts like a double top. When we see a double top, we sell a double top. Now, I gave this to you Sunday evening before this bar even existed, and then this happened. Since then, it was absolutely correct to call that a double top, and we did get short for it, and we will continue to stay short, and we will hunt down this double top. A second reason why we like it is because we dropped below this trend line. And look at all the times this trend line has caught these lows. Caught it, caught it, caught it, caught it, caught it. Just about hit it. We broke it and boom. In the fashion of a double top. So you have to go with the red Omni. It's still red. We've got a double top. We know we're supposed to sell them, which we did do correctly on Monday, and we will hold short and see what happens. So we know we're applying our rule. When we see a double top, we sell a double top. And here's what I think, kids. I think that, as you've seen in many of my videos, news comes out in the charts first. We form, and let me erase, we form this double top out of nowhere. And what happens next? Iran attacks Saudi Arabia. What should come next? We do something about it, and that should create what the beginnings of this already are, which is a downdraft from the double top. News comes out in the charts first. We have a double top, and suddenly, boom, there's an Iranian, what would we call that? Saber rattling, if you will. Well, something should be done about it. Likely something will be done about it. And if it's the U.S. who does it, this is probably the news coming out in the charts first. Now, of course, don't get crazy. We've got stops in. We put them in before we ever got short today. And we will continue to ride our stops. If they get hit, so be it. But we are doing the smart thing. And I'll tell you right now, as an analyst, I'll show you what we did today. We stayed out of the market until the market rallied, went up and filled this gap, because when we opened lower. There was a gap between the close on Friday and the opening on Sunday night. I waited for us to fill the gap, and I got my OMNIAC short right at the gap fill. That is what a good analyst will do. We're still short. We're going to hold short, And again, we broke a nice trend line at the same time. So I've got to tell you, it's decent analysis. We've got the red Omni. We're going to hunt down the double top unless our stop gets hit. But let me show you something more exciting right now. Watch this. The purpose of doing this video, why I said some things need to be shown in person, or I should say on screen instead of me standing in person, are things like this. Watch this. You're going to love this. What we're looking at right here, let me pull this in just a little bit. What we're looking at right here is something very interesting. T-Bonds weekly bar chart. I have been analyzing markets for 36 years, and I'm telling you that when bonds rally up to 167.16 and 1 week before the Fed gets ready to lower rates, 1 week, this happens. Wha-bam! We literally dropped from 167.16 to 158.12. This, my friends, is what's called a setup. We should be getting long. Look at how we bounced off of this trend line, which seems to be holding well every time we get near it. On a weekly chart, now this is not a daily, it's a weekly. Makes a big difference. We just bounced off of it. I've got orders in to be long. I hope they get filled. I want to get long. I think this is a play. I think the Fed will be lowering rates, as everyone else knows they should be doing in just 2 more days on Wednesday. And I think the bonds head straight back up. Now, why would I think that? You realize that this works like a seesaw. If the Fed, let's call the Fed over here. If the Fed is sitting over here, and you know what, let's make this look just like a little teeter-totter if we can. If the Fed's sitting on one side and bonds are on the other, here's what happens. It's really interest rates and bonds, so let me give you the proper illustration here, kids. Bonds are on one side. Interest rates, or the Fed, changing interest rates, are on the other side. And here's what happens. When you raise interest rates, the bonds go down. When you lower interest rates, bonds go up, interest rates go down. That's how this works. It has to work that way. The price of bonds, the market you're looking at right now, the futures, goes up when interest rates go down. So, the bonds came all the way down right before we're about to lower. Let me show you. Right before we're about to lower interest rates. If we lower that interest rate, the teeter-totter will look like this. The bonds will go up and the interest rate will go down. So bonds came down before the interest rate. The interest rate will go down, bonds should go back up, and that is the purpose of showing you this video. Traders, if you like what you're seeing, you've got one last chance for OmniCamp in the year of 2019. OmniCamp is me teaching you for 4 straight days and nights here in Las Vegas how to work the Omni, how to come up with your own Omni trades, how to figure out what the market will do next Omni style. I will teach this to you December 5th through the 9th this year. What's included is an education you cannot get anywhere else. I promise that to you, kids. Come out and you'll see why. Your lodging is included, your food and beverage all included, all supplies, transportation to and from OmniCamp when you're in Vegas every day and back to your hotel, and a brand new laptop pre-programmed with the Omni techniques, all included in one price. And these prices are going up dramatically in January. December 5th through 9th is your last chance. If you'd like to participate in OmniCamp, you should absolutely contact me. Give me a call, 702-629-4755, or shoot me an email. Come to livewithoscar.com. Email Oscar from there. Come to my live chat room. See me there. If you can't find me, kids, you're not looking. I'm on a live camera and microphone as much of a 24-hour day as I can handle every single day. So I promise you, if you look for me, you'll find me. If you want to come out to camp, last chance before prices go up. They're going up dramatically, and you should come out so I can fix your lives. Traders, I wanted to show you this chart. I want to show you that if you're not long bonds, you should get long bonds. If I miss this call, I'm going to punch myself in the head 57 times because I figured it out 2 days ago. I put my orders in this morning. I haven't been filled yet, but I'm hoping to get filled on a nice rally. When they lower rates, the bonds will go up. That is inherently what is supposed to happen. All right, traders, come join me at livewithoscar.com. Try to keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, join me at livewithoscar.com. Remember this chart. It is very important in the bond market, and I will see you all at livewithoscar.com.